All right, hey everyone. Welcome to a special episode of Trading the Markets with your host, Vays. I am back at the office of CryptoQuant. There you go. They were nice enough to get me a cup of coffee. There's their logo. And this is our second interview. We did our first interview with Key last time. And a lot of you guys liked it. I know everyone's asking for Willie Wu to get back on the show. I did speak to him. We may be able to make that happen, even though he doesn't do interviews anymore. And in addition, we also have one of their researchers joining us from, I don't like to dox people. Julio, do you want to say where you're from? Some people like to stay anonymous.
Yeah, sure. I'm based right now in Monterrey, Mexico.
Monterrey. One of the few cities in Mexico I've not been to yet. I really like Mexico. I will be there later this year. If I come to Monterrey, we're definitely going to hang out. Sure. One of their researchers over at CryptoQuant. Real quick, I'll let Key just give a quick intro on what CryptoQuant is, and then we're going to let him go do work. And this time, we're going to interview one of their researchers as we go through some of the charts and some on-chain analytics, mostly for Bitcoin. You guys do Ethereum as well. You recently launched a new product as well, though this channel tends to focus on Bitcoin, but we'll see how much time we have. Key, I'll let you do a quick intro.
Hi, guys. My name is Key. I'm CEO and co-founder of CryptoQuant. We are an on-chain data provider. We're building analytics tools for traders and analysts to find basically signals for fundamentals and risk management. So on-chain data itself is very helpful to monitor, especially risk. So you might remember for the FTX collapse, Luna collapse, all these contagion risks can be seen through on-chain data, especially the entity flows between those big companies. So we started from Bitcoin, Ethereum data provider, and then we recently rolling out new product that supports over 11 blockchains. So yeah, I will hand it over to Julio.
All right. Julio, I don't know what, I didn't tag you. I wasn't sure if you were going to be joining us. So if you have a Twitter, shoot over a link and I will throw it on screen share for people to follow you as well. Guys, go ahead and follow CryptoQuant. They have 213,000 followers. They have a really good Telegram channel where they post their charts for free. And they also have private reports. We're going to go through their report that they did a week ago. The next report is coming out today. I may or may not share a couple of charts from that, but that is really up to speed. But we do have last week's report we can review. All right, Julio, floor is yours.
Oh yeah, I'm Julio. I'm a senior analyst here at CryptoQuant. I joined CryptoQuant since May last year. So, and what we're doing is on the research team, create content for institutional clients. We send out a weekly report when we discuss about the hot topics on the market, fundamentals of the industry, focusing on Bitcoin, Ethereum, and also going forward also on Web3 analytics as we launch our new platform. So yeah, mostly is doing the research that our clients get access to.
Awesome. And you guys just interviewed Pierre Richard yesterday. I caught a part of that interview. I believe you're editing it now. You did it as like a private webinar, and it will be released publicly in a couple of days, right?
Yes, that's correct. Yeah.
Yeah, you did a great job asking Pierre a bunch of questions. All right. So quick things first. On my way here, took me a reasonably long time for some reason. Markets have been dropping today. And let's just take a quick peek at the charts. We got rejected by the combination of two moving averages plus my own indicator called the MRI had a resistance line right at 25,200. We literally touched it. This line has been around since October 10th. So no one can say that I put it there just in time. These dots are just coming in every single week. It touched that resistance line of mine and pulled back. I am more of a technical analyst, mostly because I consider that the average person just does not have the ability to do fundamental analysis. There's only 24 hours in a day, and 8 of those hours need to be spent sleeping. So the only way to compete in the fundamental analysis arena is to have a team. This is why hedge funds are able to do fundamental analysis, but a single trader at home is just not capable of doing that. Even on a single asset like Bitcoin, I mean, if you're only trading Tesla stock, you probably have the bandwidth to do a lot of fundamental analysis and real research, or maybe go and like sit outside a Tesla factory and like take notes. But in reality, the only way to do this kind of stuff is with a big team. And you guys have a pretty good team to do these kinds of reports, which is great. So quick peek at the price. I have been waiting for a pullback to add to my bullish position. I have been bullish. I've been saying that I am about 70% convinced, 70, almost 80% convinced now that the bottom is in and we're not going to cross those low levels. We're going to talk about that on this stream. And on a daily chart, we are pulling back. I also believe that the stock market remains the driver, and Bitcoin and the stock market are very, very correlated. And the only reason why it seems that the correlation lately has been broken is because of FTX. FTX was an isolated event to Bitcoin versus traditional markets. And the drop in Bitcoin kind of crushed the correlation to the stock market. And now we just made up for the losses of FTX because contagion has not set in. People got a little more confidence. And now we're back to a correlation with stocks. Though today's stocks are rebounding a little bit and Bitcoin is dropping. On that note, that is it for me and my view. Though I am curious, Julio, were you ever a trader using technical analysis, or you're more of a researcher from start to finish?
Definitely more of a researcher, and I don't do much of short-term trading, but more of a trend following guy.
All right, very cool. And when did you first learn and get interested in Bitcoin?
Bitcoin around 2018, during the bear market, actually. I started learning there, getting more into Twitter, reading more articles, learning about a lot from a lot of people. And so I've been doing that since then. And then about 2 years ago, I guess I started more analyzing it from an on-chain perspective. I just started doing it because I liked it, and posted some analysis on Twitter. And that's how I met Key, actually, on Twitter, and on a Telegram group. And then so because of that, he invited me to work with CryptoQuant, and I wanted to since some time wanted to have an opportunity to join the industry. So Key gave me the opportunity. So that's why I'm here.
Very cool. Yeah, I actually met a lot of people that have worked with me and for me as well over the years, basically through Twitter and just people in the community. And we're going to be talking about like the pool multiple, one of the indicators you guys use. After my last interview with you, and we brought that up as well, I actually texted him. I tried getting him on the show, but he now works for a company that doesn't like their employees going on shows. So I couldn't get David Poole on the show. He's been on my show many times in the past, but can't seem to get him on lately. Okay, so let's talk about the report you guys put out on the 15th, about exactly a week ago, with the next report coming in, so people can see what kind of things you guys discussed. This is a proprietary report for your clients. Awesome. Yeah, thank you so much for adding the financial summit onto the list. And the excerpt summary: Bitcoin and Ethereum perpetual future markets continue to show positive sentiment among traders. Derivative markets data suggests traders have been adding long positions, and traders are generally willing to go long in these markets. However, data also shows selling volume outpacing buyers, something to keep an eye on. And this has been the consolidation this entire week that has prevented us from breaking that $25,000 area, which we did hit right on the 15th, right there. So when you guys put out the report, you basically said to be careful. And we are now lower than the close of the day on the 15th. And the third bullet point, additionally, demand in the USA for Bitcoin, Ethereum, as at the highest it has been since June, August 2022, compared to outside the USA. Real quick peek at June, August of last year. That's when we were rising very, very nicely before we kind of turned in the middle of nowhere. I really expected us to go a little further, come up to 128-day moving average, but we did not. Quick peek at some charts of this report. I don't know if there's anything specific you want to discuss. I kind of liked this one, the Bitcoin's spent output age bands. And also the 412 moved Bitcoin from the old Silk Road days. You want to say a few words about that, guys?
Yeah, well, that's inside our report. We try to go more in deep for transactions that move, all Bitcoin or a lot of Bitcoin, and we go deep into the transaction to try figure out who is moving it. So this report also is done on a weekly basis. So in this case, there were 412 Bitcoin that haven't moved since 2012. That moved on that week, on February 7th. So we went deep on that, and we also we tried to see the links, on all that transaction, where are those coming, where those coins going, and try to figure out just who's behind that. And sometimes you get some really interesting findings, like this one is linked to Silk Road wallets. So it hadn't moved since 2012 and moved on that week. So and we can only just speculate on what was that. So it's probably a former user of Silk Road, and just moved its coins. And sometimes this type of entities do it in a really particular time, like maybe on market tops or when corrections are coming. It could be a coincidence, but it happens. It happens a lot of times.
Okay, really cool. So I really want to move on to the latest data. You guys did a full analysis on that.
Yeah.
I do want to move on to some of the later charts, and I put up a bunch of them, but let me quickly. Let me change my screen share real quick so that I share my entire monitor. Don't want to dox anything, so let me make sure that I drop some windows down, because okay, now we're in business. Great. All right, and now I can go back to screen share. I'll share the monitor. Real quick, guys, the Financial Summit, which is an event that I will do my best to have CryptoQuant represented at the event as well. Our next one is in Dubai on November 5 to 10. It's an event for traders, researchers, money managers, and the next one will take place in Dubai, November 5 to 10. Julio, ever been to Dubai?
Once on my former job, I went to Dubai to give a conference there. Awesome. Not related to crypto, but
okay. Yeah, lots of crypto stuff going on there. So hopefully we can get one of you guys out there for our event. It's just 50 high-level traders, and I mean everything related. It's not even just crypto; it's all markets as well, but mostly crypto, because that's my audience. We even have a trading contest. Who can make the most money in 6 hours walks away with a really nice prize. It's a really, really fun evening of of how to spend your time. All right, back to charts. So for some reason, Paint is only letting me open like 8 at a time. So let's start with, you know what? Let's start with the one you guys just put out. I think you guys tweeted this out yesterday or this morning, and this is what you refer to as the dead crosses, since the birth of Bitcoin occurred at the end of the bear market. Now, the only exception to this is, of course, the big COVID crash, which allowed me to win a very cool bet against Crypto Man Ran, which we made on like CNBC, that I said over here in around this time. This would have been early 2019, when Bitcoin was at like $8,000 before hitting 14. I said that Bitcoin would fall back to below 4,500, and we made a bet. And he said, "How long would it take?" And I said, "Well, give me until the halving." And this COVID crash allowed me to win a really cool bet that he was already gloating on, that I definitely lost. But other than that, this was a bit unexpected. So it did cross over, and it's crossing over again this time in a much more interesting way. So tell us about this chart, and feel free to be specific. And as my live audience or myself have questions, I'll do my best not to interrupt you in the middle of it, and I'll try to remember the question till the end.
Yeah, don't worry, you can interrupt me. You know, so those charts not necessarily are done by me or the research team, because we also have a community of analysts, verified authors, so we call it. So there are analysts that are doing, you know, analysis on Bitcoin and other coins. So they also produce a lot of content for CryptoQuant, and so I won't take you know, they do that. I won't want to take credit for all that. So, but in this one, what I interpret is, you know, like longer term holders of Bitcoin, representing more or holding more coins than short term holders, and that tells you something about the cycle, about the market cycle. Usually in bull markets, these longer term holders, they sell their coins, right? If you see they're the blue line in 2017, 2018.
Yeah, let me zoom in.
Yeah, it's decreasing, right? The blue line is decreasing, which are the longer term holders there, and then during bear markets they start to accumulate again. So I guess we are in, you know, as we go out of the bear market, what it's showing is that this start to accumulate these longer term holders. So that's what we're seeing right now. Since the FTX crash, you can see there that these longer term holders are accumulating again. So that's what happens on I would say on bear markets, and then as we approach the bottom. That's how I think that's the idea behind that chart.
All right, very good. And I'm trying to do this in the best order I can. Let's jump over to UTXO profits. Yeah, I don't have that one up, so I'm gonna bring it up. Okay, I'm gonna close these one at a time, so that, oh yeah, see, they're there. They're just like off to the side. So in that case, I wanna, since we are talking about holders, let's talk about this chart. This is UTXO profits. So I was actually surprised. I did not think that there were, let me do this so I can see my cursor better. I actually didn't think that 82% of UTXOs would be in profit here at 25,000. I was very surprised to see that. I guess there was a lot of Bitcoin turnover, or does it, or also so many coins probably have not moved throughout this entire bear market, and people kind of held them there all throughout. So I found this super interesting.
Yeah, it could be that they're not moving much. One thing I recall is that the Bitcoin with more than 1 year old, it's has increased to fresh highs, like the amount of Bitcoin of more than 1 year old. So yeah, we've seen that a lot of holding behavior. So yeah, it could be, and with the increase in price, of course, more UTXOs are now in profit. This is some of the UTXO in profit is a metric that we use as a valuation metric, and usually on bear markets it goes to around at the bottom 40%, maybe 45%, right? And then it starts to increase as we go to a new cycle, to a new bull market. So I think that's the what's showing there. We went I think was last year. It's not the same chart that I'm referring to, but it goes to as low as 40%. So yeah, the recent increase is making more UTXOs in profit.
Yeah, it's really impressive how it moved from, it's a really decline. It moved from under 68% all the way to 82% in basically in a month, as the price went from 17 to 24. So that's a huge difference. What a huge difference it made. So almost 25% of people, 15% of people suddenly became in profit just by this little move in Bitcoin. So that's very, very impressive. All right, let's close this chart. And open up one more. Since I closed that one, let's do the 5 metrics, and then we're gonna start diving in to some of these metrics one by one. You guys recently posted this chart with a comment: 5 on-chain metrics that prove Bitcoin's cycle bottom has been reached. And we're gonna dive into each of them one by one. I have individual charts for, I believe, all of them or most of them. We have MVRV, the SORP, which is what was that again?
Spend output profit ratio.
Yeah, thank you. Spend output profit ratio. I don't know why it just slipped my mind. And the supply and loss, unrealized profit loss, and the pool multiple. So tell us a little bit about this chart. I know it's super busy, or maybe we should just start diving into each of these metrics one at a time.
Yeah, you can. I just want to comment. The reason why we look at those metrics is because it's what we call all of those. We call it valuation metrics. So it tells us whether the price is expensive or cheap, and also it can tell us where we are on the cycle. So that's why we talk about them together, because they're telling you something about the market, how much are participants in profit, or how much are they in loss, and that gives you a really good idea of where we are in the cycle. So that's why we package them together, and you see this kind of analysis together. But we can go over each one of those, and I think it paints a clearer picture.
Yep. Hey guys, if you have any questions, drop them in the live chat, and I'm letting my mods know to throw those into our Telegram group for moderators, though I am paying attention to the live chat, so I'll probably see the question as well. All right, let's close this chart and let's start diving in one by one. Let's start with the pool multiple. Friend of the show, David Poole. And the pool multiple is crossing a very interesting metric that it hasn't done in quite a while. It crossed it to the downside, looks like all the way back in at the end of 2020 is the last time at the end of 2021 it crossed back to the downside. Now it's crossing back to the upside, and the prior time it crossed to the upside was in August of 2021. So let me and you can see the price right here. The price was $40,000. Oh, black is not a good color to use there. There we go. The price was at about $40,000 when it crossed to the downside, and right here when it crossed to the upside, my guess is it looks to be about $30,000 on the upswing. But we could also take a look at the price chart for these metrics as well. Let me get a straight line going. Yeah, that's way better. Okay, and it took a while for us to cross back to the upside. It's been 14 months, and we're finally there. So, any comments on this chart? And I'm assuming this is an arbitrary horizontal line, just based on prior breakout, support, resistance, and it seems to be a very good line that you guys chose.
Yeah, well, you know, the pull multiple has some interesting areas, levels that can show bottoms and tops of the market. So values typically over 6 indicate a possible top when we are at the end of a bull run, and when it goes below to 0.4, it can denote that we are near the bottom. So since in 2022 we got there to 0.4 in the pull multiple after Terra Luna. So in May we were there, then we were kind of increasing, and then after late in the last year on December we got also under the 0.4 value. So it was signaling all last year that we were, you know, forming a bottom, I guess. And now with increasing in price, we're seeing pull multiple out of that zone and maybe signaling, you know, what we're seeing as the early signs of a bull market, right? So that's what is telling you there, the pull multiple. So yeah, that's one of the evaluation metrics that we use to gather that type of information of where we are in the cycle, if we are in a bottom or a top. And right now, since the beginning of the year, it has given a signal of maybe an early bull market starting.
Yep, very good. And I just showed you guys the formula for the pull multiple in the screen share, and but this is a 7-day moving average of the pull multiple. That's why it's not as volatile as it just was in the other picture. All right, let's close this chart. Don't save, and move over to let's do I have a couple of pictures with SORP. Let's talk about those. SORP. So this is the spent output profit ratio. This is one of the slightly older charts, and by older I mean maybe 7 days old, and that's when it first appears to show positive signs. It did that once before for a brief second, but if we look at this, this is one crazy looking divergence. Let me make this a bit smaller, where the price makes a slightly higher high, but look at the disastrous underlying metric here, here and here. And I gotta say, in hindsight, it is so easy to say what an obvious top November was. And I would say in my almost 10 years now in analyzing the price of Bitcoin, and I am mostly a technical trader because I just don't have the bandwidth to do on-chain and analytical research. And the technical analysis does allow me to look at these charts that other people do and spot these divergences. And I gotta say, I missed this one. And the reason why I missed the November 2021 being a top is twofold. One, I've never seen a market top like that. Usually, when it's that kind of a double top, we usually go higher. We don't go higher by a few dollars and then reverse. And not only has Bitcoin never done that, It's so rare that any market has ever done it. The only market that did this was the Nasdaq, S&P, between 2008 and 2000 and 2008. But the Nasdaq did not do anything like that because the Nasdaq had a way bigger top earlier. So the markets were a little bit skewed. It's just so rare that this happens. And I believe that whenever you have double tops, you usually have a breakout, something similar to what happened right here. And this should probably be a different color. What happened right here when we broke out after this double top, or in other cases. But in hindsight, all of these metrics were screening divergence. But in my view, that had we gone higher here, all these divergent metrics would have then showed confirmation that it is a clear higher top. So just talk about this chart a little bit. And there are two other charts for spent output profit ratio. Maybe tell us a little bit what it is if you have an expertise in it. I know that other people might have made this chart, and this may not be your expertise, which is okay. It's perfectly fine. Not everyone can know everything.
Yeah, no, the spend output profit ratio, it tells you, when someone spends its Bitcoin, so let's say it sells it, at which how much of a profit it made on that sale, comparing when it first got the Bitcoin and then now that it's selling it. We're comparing those two prices in time. So we can look on chain how much of a profit are the people that are selling, how much of a profit are doing at that time, or a loss, right? So typically after a bull market, after an increase in the price, as we saw on previous stops, that metric spikes. And you can also see that for long-term holders and short-term holders. So for long-term holders, typically will be 10x on average, so a profit of 10x for all the cycle. And when you see that, it has been an indication of a market top. And I think in that chart you can see it in the where you draw the red line on the orange. On the orange part, the first one is signaling that the people that are spending their vehicles are doing it at a large profit, a really large profit, right? So that's an indication that for a possible price top, right? So but not the other one, which we saw a higher price, right? Like you said, but the indicator didn't went as high as before. And sometimes these indicators can do that, and there's a way to filter that so that we know that the bull market is ending. I mean, of course, on hindsight, it's as you said, is more is easier, right? And but we can also see that using the indicators moving average or something like that to see that if the indicator already switched trend, right? But it's what we're seeing there is basically that people spending their Bitcoins at a high profit, a really high profit, and typically that has signaled market tops on the past. And as we moved through the bear market last year, you can see that the indicator turning negative, right? So we can also see that people are spending, but now they're doing it like a really high loss, and that also tends to be signaling bottoms. So that's what this indicator tells you. When people spend, are they doing it at a profit or a loss, and by how much?
Yeah, I really like this indicator. If we go back in time here, right? I actually wish this chart went further. Wait, before I do, the legend here is way too small for me to read. Do you know off the top of your heads what the purple line represents and what the blue line represents? I know I might have another chart that shows that a little clearer, but
yeah, I mean, I didn't do that chart, so I'm not really sure. But the SOPR is what
Yeah, guys,
what do you do with that?
follow CryptoQuant on Twitter. They published this chart maybe about a week ago, also in their Telegram channel. I can probably look up. I mean, they are, one of them is an average, that's for sure. And I'm not sure what the other line is. That's okay. It's not the important part is look how accurate this has been. We have a depth cross here. We have a downwards cross here. We have another one here. Another one here. And another one here. And they all led to very significant drops in the price of Bitcoin. And it doesn't, I mean, over here, I'm going to make this yellow. Here it crossed over a little. So it threw you for a little bit of a loop. But other than that, it's been pretty perfect with bullish crosses here, here, and now this chart is a week old, and we might have already crossed. You guys have to publish an update to this if we go a little bit higher. So hopefully earlier next month, you guys should throw an update in. The other part that I really like is the divergence, where you can see how, need a line here, where you can see how as we are trending towards zero, the price still continues to drop. Though the low did come over here as beautiful buying opportunity off of this line. Oh, meant to put on. Let me get a box. Getting super fancy with mine. Okay. One of my favorite applications, by the way, Paint. One of the greatest things Microsoft ever did. And right here, it is, I'm not going to say it's, put it purple. You have a double top, maybe slightly higher by a smidge, but the price went significantly higher without causing much of a rise. And now we dropped quickly. And here's the best part. Here's that divergence where the histograms are rising quickly while the price continues to fall. I'm really liking the divergence in this chart. And once again, right here, where the price has clearly fallen, meanwhile, the indicator is clearly rising, and now we're breaking the zero line. I'm very optimistic here. This was one of all the charts I put together for today's stream. This was one of my most optimistic charts that you guys have posted this month. It's really, really cool. All right, let's I almost don't want to. No, I'm gonna close this.
Save that one.
Yeah, I think I'm gonna save this one. I'm not gonna close it. I'm just gonna do that. But we're gonna stick with this indicator a little bit longer. I think I have two more charts. Here's one more. This is a slightly more updated version. Now this is a little bit different. This is the simple moving average, 14 simple moving average of those same long-term hodlers. And you guys posted this probably about 10 days ago as well. And this one has not yet, you know, that one was a little closer to showing bullishness. This chart is being a little bit more cautious, and same thing with the comments that you guys put out, that, you know, maybe we should wait a little bit. Let's not rush too far ahead. Let's break this 1.0 line in the indicator itself before calling it a full-blown bull market. But once it breaks that line, oh man, does Bitcoin rise with a vengeance.
Yeah, this one is what I was referring to, the long-term holder spend output profit ratio. And you see their market tops above 10. This is a moving average, but if you see the indicator as is, above 10 is always, or has been always, the tops, right, for Bitcoin in the past. So and also because at that point the people are doing it at a high profit. So there's a lot of profits to be made if you spend, right, at that point. So that's why a lot of people sell there, and that marks the tops. And the red rectangles are showing people spending at a loss when we are near the bottom, because it's like they're capitulating and realizing just those losses. And once we get out of there, it's you can say that there's not much more people left to sell at losses, right? So that's why we get off of those, and the bottom has formed in the past. So it's a really good indicator for valuation purposes.
Yeah, really, really cool. All right, this one I will close. Don't say. And our final chart, using a similar metric. Oh, I don't have it up there, so I have to go to my folder. That was the adjusted version of it. Where did it go? There it is. Boom, right here. Let's make that. Let's go here first. So this is the adjusted SORP on a 400-day moving average. It's super smoothed out. This one made a really, really nice low and has started to rise. So that's one more potential indication. Should we just leave it like this, or do you want to say a few words on this chart as well, because they're all super similar with a similar metric?
Yeah, it's also showing the same, but on a more, let's say, smooth way, and as a long-term cycle indication. So yeah, it's right now it's seems to be signaling that we saw the bottom, right? So that's what we can see with these indicators. Like they tend to signal very well tops and bottoms and where we are in the cycle. So it's also showing that seller exhaustion, I guess, and now we're moving up. So, but I just want to say one thing: it's a metric. It's not a forecast, right? You need to be monitoring those metrics to see if there's a change in the trend. But yeah, it is signaling. Most of these valuation metrics are signaling that we are so the bottom, and we're maybe starting a bull phase.
All right, let's go ahead and close this chart. I love those. Okay, so now we're gonna jump into MVRV, realized price, and realized cap. Let's go with MVRV. I don't know if you want to tell us about this metric. Maybe you can explain the metric real quick. The MVRV ratio. There's also the MVRV itself. So I'll give the floor to you, and then we're gonna analyze this. Another chart I really, really like looking at.
Yeah, it's one of the most used, most famous valuation metrics. It is, it's the ratio of the market price of Bitcoin or the market cap of Bitcoin divided by its realized price, which is, the average at which every holder has bought their Bitcoin at any point in time. So we're comparing today's price to the cost of acquiring those Bitcoins for the holders. So we're comparing how much does the market price is deviating from the cost basis, right? So it's showing, at extreme levels when prices get much higher than the cost basis of the entire holders. then there's a lot of profit to be made, and that's why you see this indicator when it goes to extreme levels. For the MVRV is around 4, higher than 4. It has market important price tops, and is the opposite when it goes below 1, is saying that the current price is below the cost basis. So in general, on average, every holder is on average is losing money, right? So that's an indication of a bottom, sorry. So and then as we move from top to bottom, we move through the cycle, and so right now, all last year the MVRV was below 1 basically, so signaling that prices were too low and maybe undervalued, right? That's what it is telling. And as we moved above 1, and then it may be signaling a change in the trend for prices.
Okay, very cool. So now let's do a realized cap first, and then we're going to talk about, well, realized price, realized cap. They're actually super similar metrics. Realized cap basically takes the entire, I guess, capitalization, can we pronounce it right, of Bitcoin, and you guys did put a stochastic RSI. I'm not a stochastic RSI person myself, not of my big metric, not a big metric I used to use in my trading, but we are starting to get that sense that we are back in one of these zones over here in crossing one of the again, I'm not sure what that line represents. The legend here is that's the EMA.
Average.
That's the 7-day. Yes. Yep, that's the 7-day versus 50. Okay, cool.
Yeah.
It is a good metric. It is fairly clean, and let's see if it brings us a very, very similar move as it did the last time we broke out like this. So it's looking cool. Really looking forward to this.
Yeah, well, I mean, I didn't do that chart. It's one of our verified authors. But I guess the idea is how the realized capitalization is what I talked about in the previous chart, is that cost basis, but it's like for entire market. So it's showing the cost basis of the entire holders. Right, and I guess here is just showing how it's moving compared to its moving average, right? So kind of maybe a crossover there. What is the idea behind that chart? Looking at crossovers.
Let me close this, and now we're gonna head over. I have 2 charts on realized price. That is one of them. And here is the other one. They were published similar. I don't remember which one was older. Let's talk about the other one first. Let me grab that one right here. It does have an additional moving average. You have a realized price. Oh, no, wait. I think the other one came out first because this is already dipped a little bit. Yep. So this is realized price in a 3
to 6 months.
3 to 6 months back. So okay, perfect.
Yeah, it's the realized price for the Bitcoin that is 3 to 6 months old. So that's represents the cost at which those Bitcoins that are 3 to 6 months old were last moved or were acquired by their holders, that the current owners. So, and you can use this type of metrics as like moving averages, as you would use moving averages, and see when it crosses over or crosses to the downside or to the upside, and it gives you like a good idea of the trend. of the trend of the price. And of course, right now we're seeing that price crossed over that one metric, maybe early this year, after being below that realized price for over basically the entire 2022. So it gives you an idea of the trend of if there's a switch in the trend of prices.
Yeah, once this, me looking at it as a TA trader, whenever it really starts to rise fairly quickly, it doesn't seem to ever go back down. And this is really, really cool because you can see in these big turns, it also does show where the top of the market could be in this case, but and I know we crashed because of COVID, but that was a very short crash, and you can see it did not really affect the 6-month line. But whenever it has these major turns, and more importantly, whenever it breaks out above a prior swing high, things tend to look super well. So, and that's when the price decided to go off like a bandit. And now it happened again over here. And then beautiful move up. Though maybe I should have, one second, done this one here, because by the time it broke, by the time the red line broke, the price was already near the top, but you did have a second chance to sell at your high. And now we have another shot, but this thing is 3 to 4 months delayed, guys. So keep that, of course, in mind. Let me close this one. And this seems to be a little bit fresher on the data to me. And it also has that 200-day moving average, which we have crossed. And again, these lines don't cross very often, and they are about to cross, which is super interesting. So this one more chart. I don't know if you want to say a few words. Maybe I can zoom in a bit.
So the realized price is the indicator that you used to build the MVRV ratio. So the MVRV ratio is the price divided by the realized price. And what it gives you is like what's the difference between the price and the cost basis, right? Which is the realized price. And so when that difference becomes too high, it tells you we may be in the top, right? And when it goes down, the realized price, when price goes down, the realized price is marks market bottoms. And so yeah, right now we're, after being mostly below the realized price for the past year, we're now seeing that prices has crossed over the realized price for first time in a lot of time.
Okay, I have 3 more charts, and then and I also just got an email of your latest report. So I don't think I'm going to show the report. That won't be fair to the paid subscribers, but maybe we will just briefly talk about the executive summary of that report and what people will expect in it. So real quick, the other charts we have, I have a couple of charts on exchange flows, and then we'll briefly talk about the mempools. So here are the 2 charts I have from you guys on exchange flows. Let me just queue them up. All right, so here's one of them. And it looks like people haven't been that interested in tokens for almost 6 months now. And I found this chart to be pretty interesting. There aren't that many tokens being transferred all around, and Bitcoin is becoming the only game in town, as we're going to talk about from the mempool and ordinals in about 2 minutes. Any thoughts on this?
Is that tokens transfer I think it's referring to the amount of Bitcoin being transferred on
Oh,
the
is it Bitcoin? Okay, now
Yeah,
these are
yeah.
I see tokens, I see other
Yeah, yeah.
other tokens.
So
Okay, so this is referring to only Bitcoin. Okay.
yeah, I mean,
Um,
I think so. But because of how the chart is, I remember that. So
and this is the other one. I don't know if you want to talk about both of them at the same time. So
well,
this is
yeah,
exchange flows,
yeah.
and no,
Go ahead.
these are actually a bit different from each other.
Yeah, so tokens transferred. So what we saw through the last year, you could see there tokens being transferred, high activity there in 2022, 2021, late 2021, right? So those were mostly, some of them were miners that were selling through last year because of miners were in a financial distress all last year because of decreasing prices, increasing electricity costs for them, increasing mining difficulty. So you see there a lot of activity from miners which were selling their reserves, and also we saw a lot of activity from large holders of Bitcoin also selling. So that's why that activity is really high over there through the bear market of 2022 and now we have been seeing is that there's really little activity per especially from large holders of Bitcoin. So spending activity, I mean. So in my view, that's good because it tells us that they are not selling anymore as they did last year. So that's what I think that chart could be. The idea is that they're not selling anymore because in last year they were selling, like big Bitcoin holders and also miners. Yep, that's the idea.
Super good sign. And the other picture that I have is exchange flows. This was a little concerning, a big pile of tokens hitting an exchange just recently, but that was also the Silk Road coins as well, right? So that contributed to that.
Well, I think the Silk Road didn't went to exchanges.
Oh, didn't go to exchanges. Okay.
Yeah, but those kind of those kind of charts are really interesting because you can see two things. You can see when there's those kinds of spikes, and if in exchange inflow from old holders, they tend to also align with market cycles. They tend to align with some corrections, or so it's really important to have a look on those type of charts. Of course, you have to also interpret. That's why we do the wallet investigation report also, because if we see those kinds of spikes like in that chart, then it is important to go and investigate if you can investigate and determine who is it, because sometimes it's just could be a wallet reorganization inside the same entity,
right?
maybe.
Inside the same exchange.
Yeah. So it's important, I mean, to first have a look at those charts, those spikes, and then do the in-depth investigation to see if that has a a material impact or not.
Okay, and finally, the last chart I have is what this whole thing over ordinals has done. Everyone keeps asking me what's my opinion on ordinals, and my answer is I don't see it as a problem. I can make the argument that they're bad. I can make the argument that they're good. And I don't like the fact that they're clogging up the mempool. But when the mempool gets clogged up, it creates several good things, one of which is that's more revenue for miners. When fees go up, that is good for miners. People have to be selective on what goes into the Bitcoin blockchain. And also it creates more utility for Bitcoin second layers, like Lightning for payments, and Liquid, which is where ordinals should really be. And right here, you can see how the fees per transaction mean has significantly gone up. over the last month or so. Miners had better revenue, and that's why that Bitfarms trade that I was talking about for months and eventually was executed made probably a little bit of extra money because miners did super, super well. And yes, the block size has gone up and the Bitcoin blockchain was a little bit bloated, but that's okay because I think they did create more good than bad. So you can see that right here in the charts. I don't know if you want to throw a comment in on this.
Yeah, we actually made a report on this. We sent out I think a couple of weeks ago, and we have an index of, we call it the network activity index, which measures all those kinds of stuff like the block size, like how many transactions are there, active addresses, the block size. And so we saw that when ordinals started, network activity as measured by our index, it spiked to fresh highs, record highs. So that's one thing that has happened with the emergence of ordinals, of inscriptions. And some people like it, some people don't like it. I guess miners liked it because after last year they really were in a not so good financial situation. So it's more activity on the network and more fees for miners.
We have a comment saying that ordinals can't technically be on a second layer protocol because they're using Taproot. But the point of ordinals, anyway, I'm not going to get into the whole ordinals. That's why I need to have Jimmy Song on the show. We can debate ordinals. Ordinals don't really give you any ownership of that Satoshi. Like, that's not really how it works. I mean, you have the ownership of Satoshi, but it's going to get moved around. The whole point is to make up another gimmick as to why NFTs have usefulness, which is debatable whether they do or not. And you can create the same aura of ordinals, creating some fictionary use case for NFTs on top of the liquid sidechain, where it actually belongs. But that's a whole different discussion that we can have. Okay, so I'm done with charts. Let me go back to this or that. This. Let me go back here, and I'm going to grab the report that I just got in my inbox about 3 minutes ago. Thank you, Ben, who may walk over and be in front of the camera to say hi and introduce himself, so you guys can follow his Twitter as well, who just sent it out. And here's the executive summary on this week's report. Since Paxos said on February 13th that it would stop minting BUSD, there have been more redemptions, users trading the stablecoin token for real US dollars. The exchange outflows totaling $3 billion. Meanwhile, as BUSD reserves on exchanges decrease, USDC and TUSD, which I'm assuming is Tether, exchange reserves have experienced a significant gain of 57% and 39%.
Yeah, TUSD is true US dollar.
Oh, that's true US dollar. Okay. Yeah. So is true US dollar, who makes that? Is that Binance?
No, I can't recall right now, but it's not Binance. Binance is BUSD. USDC is Circle. And
Binance to BUSD, sorry.
USDC is Circle, yeah.
USDC is Circle.
Yeah.
USDT is Tether. There it is. In the case of Tethers, we have too many stable coins, which I guess is good because it kind of diversifies it a little bit. Look, if all, and this is the big fear, right? People are like, well, Bitcoin's going to crash if the stablecoin market is, eradicated. And I take the other view. If the stablecoin market gets eradicated, then more people would be interested in Bitcoin, because Bitcoin, while it's not as stable as the US dollar, it doesn't go down in purchasing power like the US dollar, even though economists like Nouriel Roubini argue otherwise. We'll see what they're saying once Bitcoin is back to new all-time highs, as we all expect it will sooner, hopefully sooner than later. But anyway, the reserves on exchanges and redemptions have stayed the same, while it has gained market cap from BUSD. So too many stable coins. I try not to use them. Not a huge fan, but sometimes you have to. And I do trust Tether for some reason more than most of the other ones. The other ones are either too regulated or created by people I'm not a fan of. And once again, I default to Tether. The rest of the report goes on with a bunch of charts, which I'm not going to be sharing since the report just came out. Wouldn't be fair to your paid subscribers and you guys as a whole. But that is pretty much wrapping it up, unless you want to say a few more comments about stablecoins, so which is what this report focuses on.
Yeah, just that we make an analysis. So after the Paxos announcement, we wanted to see how our every stablecoin behaving after that, right? Who's gaining more market share from BUSD, and also the flows between exchanges or in or out of exchanges. It's really important to keep an eye on for exchanges for risk management purposes. So that's why we dived into that, and our clients can see that, and also follow that on real time on our platform.
All right, super cool. Well, Julio, thank you for joining. I'm gonna real quick glance at the price. Also want to mention there is a Bitcoin conference that, whoa, what the hell just happened here? Uh-oh, did I forget to pay my DNS bill? All right, I'll look into that. Unconfiscatable.com should be working, but it's not working. All right, I'll look into that. Are all my websites down? No, just thefinancialsummit.com. Sorry, just unconfiscatable.com. Hopefully we didn't lose the domain. That would suck. So thefinancialsummit.com, that's the event for traders. It's taking place in November in the UAE. Unconfiscatable.com, once the website comes back up, will be taking place in Las Vegas, Nevada, in December. So come and join us. This has been an interview with a couple of quants from CryptoQuant. You can follow them on Twitter and join their Telegram alert channels. Links are in the video description as well. We had, two of the same thing. We had, no, that's just mine, Key earlier, and Julio. Key is the co-founder and CEO. All right, I'm gonna take a peek at the price, see what's happened. We have not fallen further since I started this interview. What is going on? Okay, maybe it's not our website, because now TradingView is also doesn't seem to be working. So this may not, unconfiscatable.com could be working. Maybe something else is happening. Yep, price is moving. We are dropping today, and someone did ask about the daily golden cross that's about to happen, but we already crossed the 50 versus the 200. We could be pulling back a little bit more. Right now, I am still enjoying this pullback and consolidation. For those that are dollar cost averaging, I think this is a great time to dollar cost average. Your probability of buying a Bitcoin below 20,000, I think, is super low. So you may not want to take that chance. And if it does fall below 20,000, consider it an awesome blessing. The halving is a little over a year away. So keep that in mind. I think we just had I think the mempool reset, the difficulty reset, and now the halving is projected once again to take place at the end of April, but I think it's going to happen sooner than that. I think it's very likely the halving will take place sometime in the middle of March. So we are just over 1 year away. All right, any closing thoughts? I don't know, Ben, you want to jump on the stream or you good? You're busy.
Sure.
All right, let me end screen share for a second. I'll introduce you guys to one more member of CryptoQuant. We'll see who else I do an interview with next time. Let's stop the screen share. I'll let Ben introduce himself and tell us what you do over at the company. Julio, if you have to run and do some work, we can let you go, and then I'll spend a few minutes with Ben, and then we're gonna call it a show.
Sure. Thank you, Tom. Nice to meet you, and thank you for having me.
Awesome. No, thank you for joining, and hopefully I'll see you in person one of these days.
Yep. Thank you. Bye-bye.
Later.
Talk soon, Julio.
Thank you.
All right, Ben, tell us a little bit about yourself, about your background, how you ended up at CryptoQuant as we turn off for a few minutes.
Yeah, sure. So thanks for having me. I joined CryptoQuant about 1.5 years ago now. I didn't join through Twitter, but I did reach out to Mason and Key directly. Was pretty interested in joining their company or this company. My background is actually overlaps with your background a little bit, right?
Yeah.
So, I started my career in traditional finance at AllianceBernstein, working with, an asset management firm working in portfolio management of equity portfolios for private clients. And then I moved over to MSCI, where we both worked at for a time, working on the business development team. So integrating these risk models that you were building for asset management clients. And actually, clients that I had previously worked at. So helping them understand the sources of risk and return of equity portfolios, all about that. And then I actually took kind of a hiatus where I spent some time in the commodity space as well, similar to Julio, trading aluminum and other chemicals for mining, gold mining and other types
Real
of mining.
mining.
Yeah.
Old school mining, I should say.
Exactly, yeah.
Traditional mining.
So, I set up a trading shop down in South America. I was doing that for about 3.5 years. And then the idea of stablecoins came up actually for cross-border trade payments. And that's how I really got into crypto as a full-time job. So helping our partner implement stablecoins within their treasury and managing those and using those for settlement. And then after that, like I said, I reached out to Mason and Key, and I've been here for 1.5 years. And my role here is to help implement some of these different data sources, this on-chain data, and helping our clients understand how they can build strategies using fundamental data, as well as technical indicators as well, and build different trading strategies is kind of the main use case of our traditional financial clients, hedge funds, banks, market makers, institutions like that.
Yeah, this sounds great. Are you guys still hiring? Are you looking for people? Hopefully I don't need it. Hopefully I'm not gonna need a job, but hey, you never know. Like, look, every company is hiring if you have the skills that they need for the company to do well. So clearly the company likes finding people that even reach out to them. So if you have a skill set and experience in building models or doing research, and this super interests you, because honestly, that's the most important thing. Like, I survived, like, I wasn't the most knowledgeable person in my Wall Street firms, but I had a huge interest and I was passionate about the work. So that's probably one of the most important things for an employee or a researcher. You have to love what you do. So it sounds like, I don't know, are you guys looking for more researchers? I'm just curious. I'm sure my audience may be interested.
Yeah, definitely. We made it out relatively unscathed from all of the market turmoil. So we're going to be hiring this year more. I'm building out my team a little bit. So I'm looking for
Yeah,
More
what
like
are you looking for?
sales. Yeah, I'm looking for sales engineers, implementation specialists, to help us build our brand and implement some of these different strategies at our clients. But like you said, I think, one of the most important things for us is the passion.
Yep.
I think it's not rocket science. It can be technical at times for sure, but we can teach that. And sometimes it's the passion that you can't teach. So that's what we look for, definitely as a kind of, number one. And then obviously, experience.
But even your salespeople need to be very financially inclined and very mathematically inclined, so they can answer questions about some of these models.
Exactly. Yeah. I think, a baseline knowledge is definitely required. And then for the, research team, I think that team will also be built out further. We're looking for consultants, we're looking for researchers for Bitcoin and for, the broader digital asset market as well. So if you know anyone, referrals are always the best way to go about this.
Yeah. All right, guys. You heard it here. Oh, Fed is gonna go live in 5 minutes. No, I don't know if I'm gonna stay down in for that, but we'll see how the markets react. And I'll do a video tomorrow. Tomorrow's another travel day, probably another video from the airport. But we'll take a look at the reaction to the FOMC minutes and what that report says. All right, man. Great seeing you again.
Good to see you again.
Thanks so much for coming on. Thank you for hosting me here at the office down here in Miami. I'll be here one more day. Oh, I'm at an event tonight. If you're down in Miami, I will be at Epic Talks. You can just, I tweeted it out as well, so check my Twitter, guys. Epic Talks, they do really good networking events. It's always like the last Wednesday of the month. My friend is an organizer. She's attended the Financial Summit in Dominican Republic. Shout out to Melissa Wagi, who organizes Epic Talks. So you'll find me there. Just Google Epic Talks Miami. I think it's like maybe $100 to attend the event. Something like that. And it's just an evening event from like 7 to about 10 p.m. something in those hours. All right, I'll be there around 8. All right, guys, thank you all so much for watching, and I will see you all on the next one.